Hello guys, welcome back, and today welcome back to another podcast video. I have beautiful Nathan here.
Well,
Thank you so much for joining me today again.
pleasure.
It's always a great moment to have you here because it's very hard for you to get here. So I'm very busy on the trading floor.
We're very busy,
Yeah.
but it is always a good time to spend time with you. But keep in mind, we do this
Every
lot
day,
throughout the
yeah.
day,
So just here we're sharing our knowledge with you guys, and hopefully we can help the traders out there. So if you want to know more, about the market, this video is on a playlist, so you can go and watch the latest ones that we've published on the ACY Securities YouTube channel. And as you're there, subscribe to the channel and give us a thumbs up on this video here. And if you're listening on the go, maybe you're listening on Spotify. You know, some people go to work, they have Spotify, they get Apple Play or something. There's all those technologies today, right?
when you're running or
Yeah,
at the gym or
exactly.
trying to avoid the misses, whatever it is you want
Jesus.
to do,
Yes,
Spotify can work.
yes, that's correct. So give us a thumbs up, guys. It's not going to cost you anything. It will make us very, very happy, right, Nathan? So today, what are we talking? We're talking about something that it's really, really interesting, all right? Well, two things that is really, really interesting. And first of all is the gold, and second is Australian dollar,
Sure.
right? So we have those two contents that we want to start today. And first thing here, I want to go for it. I've just saw a news today. I've been right already, but I want to come and say this again. The news was that the RBA won't cut the rates since 2025 in December. What you tell me about that?
Well, did that come from the RBA or did that come from like Channel 9 News?
That it's RBA in the
We
back.
won't raise rates until 2024. Remember, this is
Yeah, true.
the RBA have said some things in the past
Yeah.
that they weren't correct on, or
Correct.
perhaps we'll go as far as to say they're not proud of.
Right. That's
so
beautiful.
I get it that we're listening to what they say, but is that something you would trade off? I think would require a lot of trust
I do think that.
in the RBA. Do you think
Yeah,
that?
yeah.
Like,
Look, because when we
they're
look
giving
to
pretty specific timeframes, aren't they?
yes, but I want to record you back in 2023. I remember this conversation we were having in the desk because me and Nathan, we sit in front of each other. And then I was talking to Nathan. Nathan, look, the market is it's pricing 7 cuts for the Fed. How many cuts have we done until now?
Not a lot.
Not a lot, means zero, right?
Well, Switzerland did, right?
Yes.
I
So
think Switzerland did a cut, and that's about it. So
it is what it is. I mean, the Fed was expected to cut 7 times in 2024.
they want to cut, they just can't.
Exactly. Well,
That's the problem.
Exactly, that's a good point actually.
So on that,
Yeah, go ahead.
my question then becomes: it's almost like a standoff where. Is it more likely that the Fed won't cut now
Yeah,
for
definitely.
various reasons?
Definitely.
But I'm watching who's going to follow Switzerland.
Ooh.
Like, who else
Who's
is
gonna
going to
be
be
the
the
second?
first one? Like, who's going to be the
Yeah.
first serious economy to say, we can't hold on any longer? The first one to blink is what I'm looking for. And
Who do you think it will be?
Europe.
I was
No, I mean,
about
hang
to
on,
say
hang on,
that. I was
I'm not
about to
sure.
say that. I was about to say I think ECB will be the first one as well.
And I am seeing...
When do you think so? Next month? Well, next week already is next month. So what you mean June, July?
It's like when you actually do the bad thing that you shouldn't do,
Yep.
right? You've kind of already done it in your mind, haven't you? A couple of times.
True.
Before you commit that thing. So in my mind, I'm thinking they've already understood they're going to cut when perhaps they shouldn't, or based on what they've told us they're going to do, like really get in there and fight this inflation no matter what the cost. Whereas I feel like I don't want to put a time frame on it because I don't know.
Yeah.
I don't have that crystal ball,
No,
but
so do I.
I
It's very
feel like
hard.
they're going to be first.
And another thing is, just yesterday we had German CPI,
Yeah.
and the month over month came lower, but the year over year came higher than the previous. Well, it came as the consensus expecting.
Same in Australia?
But, same in Australia, but it was already higher than last year because last year was 2.2 and right now it's 2.4, so it's still going higher. It doesn't mean that the market haven't moved much because it was as the consensus was expecting.
Sure.
But if we look from the previous to the actual, inflation is still rising in Australia, in Germany, right?
Absolutely.
And
They're
Germany has
an
a
artificial.
correct.
They're factoring in artificial cuts to make it look like inflation's going down.
Correct.
Coming up with electricity in Australia.
Electricity, yeah.
However, we know now that it's actually still going up. So is the cut or the artificial plan to make it look like the CPI is coming down, but could it only bring it back down to where it was?
You touch on a very nice point about the electricity. I've heard you talking with some of the traders here in the trading floor that something's going on with the electricity here, that the government will pay something, or can you elaborate more? So because this is related with the RBA, and then I will give you my take on that.
Sure.
So what's going on that? Because there is inflationary, all right? Just government giving the money is already inflationary.
Yeah. Okay, well, the nuts and bolts of it is everybody uses electricity.
Of course.
So it's a cost, and the cost is rising.
Yeah.
So the government is saying if we could get people paying less for electricity, that could help initially bring the look of CPI or inflation coming
smaller.
down.
Yep.
So their whole plan is we'll just, even though the prices are still going up, right, or not being cut, we're just going to give people $300 straight away on their electricity bill to make it appear that prices are dropping. It's
So
just that someone else is paying.
There is
the
a
bill.
sense of manipulation on that, isn't it?
A sense.
This is a manipulation, isn't it?
It was O.J. Simpson. It wasn't a sense. They're literally going, the glove doesn't fit, right? They're doing kind of the Johnny Cochran, we're just going to make it look like people are spending less on their electricity. And if you're from Queensland, which I'm a Queenslander, they're giving them like $1,000 off. Every single people. Doesn't matter whether you're Clive Palmer, a billionaire who owns mining companies who benefits from electricity, right? Or the poorest person on the street, you're all getting $1,000 off. Wow. So therefore the logic is it can at least provide some relief, is what they're calling it, to inflation. But what they're doing is giving people money that they can go and spend.
Yes.
And create more inflation.
Create more inflation.
So that's my take.
So that doesn't look good for the Australian dollar. I'm just saying.
I'm not giving any, obviously,
advice, of course.
Correct,
we're never going to give that here. But in our personal opinion, that doesn't look good.
Well, I'm listening to the market, right? And so therefore using these really key longer term trend levels, right? And looking at major support levels becoming resistant. So if it's such good news for the Aussie dollar and inflation's going up, we just see these initial spikes and then the sellers come and jump all over it and the buyers disappear. So they're the things I'm looking for trading opportunity wise, and I'm listening to the market by saying, show me, tell me technically what the buyers and sellers are doing, and using that more as a guide. And so far we're seeing a continuation of the longer term downtrend that I can see. Now they can come up with all of these grand plans, or inflation levels, as they did a couple of days ago, has risen against expectation. Yes, that could be good for a currency, but in my view, it's only good if you're trying to just slow your speed down a bit. They don't want to raise rates.
But when we looked for the Aussie dollar, right? Yes. Aussie dollar against the US dollar.
Sure.
If we look, it's such a drop. It's such a big drop, all the way from 67 now to 65, 66. So that's already 100 pips. 100 pips move.
It's a big move.
We're talking about 1,000 points. That's a 1% drop in 1 week. In 1
and
week.
a significant move up.
So that's it doesn't just make sense.
And that's based on really good news, right?
Yeah, in a sense, good news. Yeah, because
Right,
it will
so-
generate more. So basically, the market is being manipulated by the government. Voila.
Yeah, but don't get me wrong.
Yeah, no.
Australia's
That's,
not the worst.
no, definitely
this
not.
game, so-
Look at Bank of Japan, for instance. Look at Europe. Look at US.
Right?
Look at US. Do you think that inflation really came lower last month? Do you really think inflation was lower after 6 consecutive months of high inflation? Tell me how they can reduce 1% of inflation in 1 month.
Yeah. It's
impossible.
It's pretty unreal.
Pretty unreal.
So therefore, I'm looking for confirmation for the market to show that it's agreeing with me, rather than, or if I'm wrong, fine, but I'll be able to see that and I can adjust my strategy.
Yeah, for sure.
But I think globally around the world now, it seems like, at what point does the market start to realize that
this is happening?
Yeah.
Yeah, look, if we look to the US dollar, right, just going
Okay.
a little bit off topic here. Yesterday, on Wednesday, we had a bit of the whole week since Monday to Wednesday, we had a very weaker US dollar, right? And if you look to euro dollar right now, we're seeing a strong US dollar.
We are. That's true.
The reason is...
Sorry, go on.
No, you go. Go first.
No, I was just going to say I'm looking at this weekly technical trend.
Yep.
And it's still holding.
For the US dollar?
For the US dollar. Okay. So I'm looking at that. However, I'm looking at the fact that the moves, say this year, are well inside the previous...
big move, exactly. Yeah. It's just like a retracement to continue to go up.
Which shows uncertainty on both sides.
100%.
Or are we entering a stagflationary kind of environment?
Yeah, in my opinion...
Which we can get to later, but...
Yeah. In my opinion, I think the big reason why the US dollar have raised these two, 1 day, pretty much 2 days now going to Friday, it's the main reason one of the FOMC and the Fed participants got laid off, and he was a bit of a dovish guy, and they put a very hawkish one. Sorry, I have to laugh because it's such a stupid thing. But
so for the rest of us,
yes.
Or,
and then they put a hawkish guy to...
How do you determine that? Like, how can you measure whether someone is dovish or hawkish?
Yeah, for sure. So basically, we have 3 options into a...
Sorry, and when you say dovish and hawkish, you mean someone who's likely to cut or
unlikely to cut.
Got you.
And someone that is likely to cut, someone that is likely to raise, and someone that is unlikely to do anything. So we have 3 periods of the market, and it goes from hawkish to dovish to neutral. All right, sorry, neutral to dovish. So the hawkish person, when we say, Nathan...
Hang on.
Yeah.
So why is it called a hawk?
Hawk is because...
And ChatGPT, if you're watching, it's okay. Luca knows.
I know, that's all right. So we have 2... the stock market's full of animals, right?
Right, it is.
We have the bulls, the bears,
yes.
and then we have the hawk, and we have the dove.
Mm-hmm.
So the hawk goes from the top. It's a very aggressive, right? And the dove is like the peace. Mm-hmm. Right, we all know. So if you are Catholic, if you are from a religion that has the dove, you know that the dove is a very calm animal, is a very gentle animal. Therefore, it's a gentle monetary policy. It's a very not aggressive. They will cut. Got you. And then when we have a hawkish, we have a hawk coming from the top, like attacking those and other animals, making them, the food for them. So basically, they're trying to keep raising.
They want to be aggressive.
Exactly.
In their stance.
And then we have the neutral as well that doesn't know where to go, and he's just in the middle of those both. He can opt to be hawkish. He can opt to be dovish.
If you had to pick an animal to be neutral, what would it be?
A neutral animal.
We'll come up with our own.
I think a turtle.
A turtle.
Yeah.
The battle of the okay. A
Why?
turtle.
Yeah.
Right, like it's unsure. It's got its head inside its
Yeah,
shell.
exactly.
It's protective, but it could be aggressive.
Exactly.
Okay, I like it.
She can choose where she goes. You know, she can protect
I was
herself.
thinking more like a dolphin or something,
Dolphin.
but yeah, they
A
can be
dolphin.
aggressive too.
That's
so.
true. Dolphins, if you look to them and you don't know, you can
no.
think that it's a shark, so it's aggressive.
But because we're in Australia, we're going to go with koala bear.
Oh,
right?
true.
What do you think?
Eating
They're kind of just
eucalyptus leaf. Yeah,
They're just getting high on eucalyptus leaves. And they don't do a great.
They're so cute but so stupid. They know they get high, but they continue to get it.
Yeah, the whole eats roots and leaves thing, right? Like that's what they do.
Every time you see one, he's like, yeah, peace. Anyways, so now we're seeing all this chaotic scenario on the market.
Right.
Where is the money going?
Well, this is where I feel like right now that is an uncertainty.
Okay.
In that I feel like from what analysts are saying as well as watching the market, there's not as much attention of funds moving into what used to just be an ocean of the debt market or the bond market.
Correct. That's
Right?
correct.
So we're seeing yield. They're going to have to offer more and more yield.
Yep.
Right? So are we seeing a scenario where certain players in the market like China or BRICS nations, they're obviously pushing more money into gold, okay, which we're seeing in central banks, rather than placing it in the debt market or buying bonds.
Right.
Right. So I'm looking at that and saying, could that explain why we've seen, money out of the debt market? We've seen higher stock markets. We've seen higher gold.
Yep.
We've seen, moves in the smaller assets
All-time
like Bitcoin.
high on gold. Yep.
So therefore, all of that money that might be starting to leave that debt market more than previous is going into these other assets. But if we enter a phase, right, where this causes a disruption in the debt market, right? This view that we could see a sudden jolt back into this US dollar. Because what else have you got?
Yeah,
Is what I'm wondering.
I think,
and it's not something I've got a clear view on.
No. I do have similar views as you because I do believe that US dollar can be very strong this year. But I think there is a lot of attention going on gold.
Short-lived kind of.
Yes, short-lived pullback, I guess. It's more like a strong US dollar for this year.
And silver, therefore?
Silver as well. Lots of people are buying silver
Yeah.
nowadays. And if we look to the chart, silver, it's been a pretty good investment for the past couple of weeks. But the thing is, when we have the gold, I think, most of the investors will continue to put the assets on gold as well.
Even if it's just a change in percentages, like if you look at the big asset managers, etc., they might be saying, well, normally we might put a small percentage into gold,
like
but a larger percentage here. Are we just starting to see...
To swap this curve,
Yeah,
maybe.
and that takes time, right?
Yes, it does.
So-
It's not nothing. It's going to happen like that.
Yeah.
We call this the matrix, right? Because the matrix have. Yeah, that's true. When you do economic classes, that's finance class.
Yeah.
That's what they say. We have the matrix risk to reward square. So whatever is on bottom here, it's unrisky. Whatever is on the top is very risky.
Yep.
So maybe it's happening this now, because.
You remind me. I can't work out whether you're Neo from The Matrix, the movie.
Oh yeah.
Or that other guy, the Judas guy. The one
Which one?
because you got the beard. And,
Oh yeah, the V.
the
Yeah.
other one.
Sure.
But I hear what you're saying.
Yeah. So I think this is my view pretty much of
Yeah.
what I'm looking to trade for this year and in the next coming months as well. I think June will be a very volatile month. We had a very, very, very steady month in May, but June I think it will be a very good month, and so July back on track.
It's pre-election.
Yeah,
So
that's
we're running
correct.
up to election. Is it fair to say, from a fundamental point of view, that they would prefer not to make
110%.
big changes?
110%.
I mean, I get it's not an influencer. But
No, yes, it does. Because look,
yeah.
Biden, how do they call it? Bidenomics, like economics from Biden.
Yes.
I like that. And Trumpnomics, so Trump economics. So they're very different, right? And the central bank right now is on a higher rate. So the population will look, and as the central bank from the Fed doesn't have anything to do with the government, the US government, wait, people think that, all right? People think that.
Yeah.
That's what they say because they are independent central bank and they take the decisions based on their own models.
They do.
They do. Of course they do.
Of course they do.
So,
do they own the government?
Yeah, no, of course
Then the
not.
question becomes, who owns the central bank? And then,
that's
then you
a
start to know
good
who the
question.
big dogs are, right?
That's a good question, Nathan. I haven't thought about that
Because
actually.
it's not government, right? If it's not government,
No.
then the question becomes, okay, who owns those guys?
Yeah, because
And
they
what
own the
influence
commercial banks.
might they have, right? I'm not going all Alex Jones here. I'm just saying that when we're looking at one thing affecting the other,
Yes,
you know,
that's true. It makes me
everyone
think.
says, oh, these two don't really like each other very much or they're independent.
Yeah.
But is there something else that could influence both of them?
I don't know.
Yeah.
I want to know from you guys. What do you guys think? Do you think who owns the central banks? That's a very good question. So put down in the comments. Now, to finish it up, what are you thinking of the market? What are your best picks? You know, if you would tell me, what would you be your best picks? Which one would you choose?
I'm looking at it right now, and like every trader, you've worked out the drivers and you've worked out position, and you've said this is what I would like to do.
Mm-hmm.
But then you need to see signs, right? You're like, give me some signs here that this could potentially be happening. That's where I'm at. So right now, I'm looking for a deep correction in stocks.
Stocks.
Because if inflation's still going up
Yep.
and it isn't fully controlled, and they are going to take longer to cut, right? And therefore, if we go into a stagflationary period where inflation's still around, but we're starting to see weak data, so economies are getting smaller in productivity, but they're having to pay as much, right? So I look at that and think that can't be good for the returns on companies. And if we're reducing the amount of money that we're creating,
yep.
right, then who's buying stocks? So are stocks potentially, stock market, and I'm talking indices in general, going to have a correction? Now, I'm not suggesting a crash or anything like that, but could there be opportunities here? The other thing I'm looking at is I'm wanting to see if we are going to see some continuation of US dollar strength, could we see a pullback to be able to get into this uptrend
And continuation
in gold and silver? So I'm sort of looking to see that relationship between gold and silver
will
starting
go,
to come.
The spread between them,
And so that's pretty much where I'm at. And I'm thinking that we could therefore see continuation in the bigger currencies against US dollars.
I do believe in that as well.
Weakness on places
on euro,
like Australia, if you've
Australia,
heard of it, potentially, and of course looking at big currencies like the euro and the pound, looking for significant reversal points is what I'm waiting for.
Yes.
And then trying to trade short on those rallies.
Yeah, look, I don't have anything to add. You pretty much say what I'm looking at as well. Except for the stocks, because I'm not too much on the stocks. But for the currencies,
that is the first time he said he doesn't have something to add.
No,
he generally does.
No, but that's actually that's exactly what I was thinking to say, and it's really good. The fundamentals are very lined up. I think we're gonna have a very good month of June. So thanks.
Any cuts in June?
No cuts in June.
So we're gonna be
probably July on ECB.
Oh,
but we have to first we have to check the inflation numbers on tomorrow, and then from there, and then we go from there.
As in the PCE.
Yes,
which
in the
is sort
CPI
of end of the
as
week.
well. Yep.
And then you're
correct.
Okay.
Yep.
Fantastic.
All right, Nathan, thank you so much, mate.
Pleasure.
It was a pleasure to have you here again.
Always.
Hope you guys could get something out of this podcast. Share this content with your friends. And again, watch the playlist, because we do have a bunch of podcasts already, and on the Spotify as well. You can watch, you can listen on the go. And if you have any questions, please just put down in the comments if you watch on the YouTube. Guys, thank you so much. Subscribe to the channel, and I'll see you in the next one. Bye-bye.
See you, everybody.